What's going on, everybody? And in this video, what we're going to be talking about is two dividend stocks that are insanely undervalued right now. We're going to be looking at what these companies do, what makes them undervalued, different things. Is the market just kind of screwing investors potentially with this undervalue, or are these stocks a buy? We'll go over everything you need to know about these two dividend stocks in this video. But before I go any further, I said if you enjoy it, you make sure you give the video a thumbs up and you subscribe. You turn on post notifications for videos coming out every other day, yada yada, you know the role. Thank you so much again. I just want to make a little appreciation moment. We hit 1,000 subs on the channel, so thank you so much for all the support you guys have been giving me. So thank you for that, but enough of that talk. Let's get into the video. So what we're looking at right now is my portfolio. If you're new to the channel, we usually start the videos off by just looking at my portfolio. If you want to get complete access to this, it's 100% free. Check out the link in the description or comments below. It'll say dividend portfolio. It'll take you to M1 Finance, and you can analyze my portfolio if you'd wish. But also check out M1 Finance using links in the description or comments below and get a free $50 by signing up and depositing $100. But you know how all that stuff works. Let's get into the first stock on this list, which is Pennymac Financial Services Inc., ticker PFSI. Now let me stop and say that both of these stocks we're going to be talking about today are not the most well-known stocks, but they have huge upside potential in my personal opinion. The second stock, in my opinion, is a little bit better than the first one, but let's get into this video. So over the past 5 years, when this company actually IPO'd back in 2018, they are up 267% since then. This past year, they're up 13.09%, and a bit of a flat, crazy year, going up to 64, then going down to 57, then going back up to 67, then going down to 56, and going all the way up to $70 a share. So crazy movements within this stock. They currently have a dividend yield of 1.23%, paying out 80 cents per share. Now they have a PE ratio, a forward PE ratio of 3.18, which is insane. Okay, that's incredibly low. It's almost suspiciously low. They have an earnings per share of 20.44. So they're making $20 per share, but they're only paying out 80 cents. So that leaves them with a payout ratio of literally 3.91%, which is insane. They have a dividend growth record of 2 years, and they have some pretty solid grades, B minus, A minus, B minus on their dividend safety growth and yield. Now we look on their dividend history. What we'll see right here is that it's doing pretty solid, okay? You can see slowly increasing ever since they started to pay those dividends in 2019, slowly increasing and increasing, which is good stuff. They pay these dividends on a quarterly basis. Now, looking even further, they have a market cap of $3.84 billion. You can just see right here, earnings per share trailing 12 months of 18.07. Incredible statistics on this company. So who is Pennymac Financial Services? Through their subsidiaries, they engage in mortgage, banking, and investment management activities in the U.S. They operate in 3 different segments: production, servicing, and investment management. So the production segment is involved in origination, acquisition, and sale of loans, yada yada, pretty much an investing company, especially in mortgage banking. But let's look on their third quarter highlights. Net income was $249.3 million, diluted earnings per share of $3.80. Annualized return on average common stockholders return on equity of 29%, which is an insane ROE. 29% is incredible. They repurchased 4.2 million shares of common stock worth of $257 million. So it shows that they're investing in their company and that they believe in their common stock, because you're not going to be investing in your own common stock as an investment company if you don't believe in your future. Their board of directors declared a third quarter cash dividend of 20 cents per share. So that's some big stuff. Book value per share increased 6%, which is incredible. But let's talk about this. Production segment pre-tax income was $330 million, up 35% from second quarter. But their third quarter of 2020, it's down 46%. And it says as a result of a less favorable market. Now, this is kind of insane stuff. Their third quarter of 2020 was incredible. Check this out. Production pre-tax income, Q3 of 2020, I still have yet to find why this is. It might be some valuation things, different things like that. But still, nice uptrend ever since 2019, which is what we really like to see. Is you zoom out and more of a long-term outlook. PFSI's return on equity is expected to remain attractive and trend toward our pre-COVID average time. Now, just to throw this out there, I don't know if this concerns you or anything, just to see they had an incredible third quarter of 2020, and now these look average. I would honestly not make that be your biggest concern. I would be concerned if this was a very poor quarter and their earnings were negative and then they started to make it trend. But just because they had a very solid quarter does not mean that these quarters are not as valuable. Now let's talk about some more stuff on the stock. You can see that the revenue is looking very solid, slowly increasing year over year, which is incredible stuff. Net income, we will see same thing, except for right here, it's still down a little bit and it's kind of thrown off by the Q3 2020. Balance sheet, assets, liabilities, looking very, very solid. And cash flow. Free cash flow is positive, which is really, really like to see. Cash flow is the most important part of a business because cash flow is king. Now, quarterly revenue growth year over year and quarterly earnings growth is going to be a little bit thrown off by that Q3 spike. Return on assets is 5% and an operating margin of 44%. Return on equity of 39.35%, which is incredible returns. Profit margin of 33%. You can see this company has a lot of upside potential. They have a payout ratio of 4.19%. Huge stuff. Total cash right now of $900 million and total debt of $14.96 billion. But their total current ratio right now is 1.23, so they're sitting pretty solid. They have nice price targets right now, 50% upside on the stock, and it's a dividend stock, so dividend growth. This is whenever you kind of catch those companies and take, for example, Warren Buffett when he got Coca-Cola. Now, I'm not saying PFSI is the next Coca-Cola, but I'm saying that there is growth potential within the stock for them to take this company and move upwards and get a better yield on cost. And that is what I'm saying the opportunity is for this dividend growth stock. They have a high price target of $111, a low of $85, and an average of $98. And they currently trade for just below $65 a share at $64.98. Insider activity. Insiders are actually really liking the stock right now. Q4, they bought $16 million worth compared to $1.95 million sold. Q3, they sold a little bit. Q2, bought and sold. And Q1, they bought a ton and sold only a little. Looking on institutional ownership and institutional activity on the stock, it's a little bit all over the place. What we'll see right here, sorry about the market beat ad, they do this stuff. The total inflow to the outflow from institutions is actually a little bit negative. 556 in inflow, which is buying, compared to 790 million in outflow, which is selling. But Q3 of 2021, which is the most recent activity, we're seeing a bit more buying activity. So recent sentiment on the stock seems to be pretty solid. But let's talk about the second dividend stock on this list, which is ticker OPY, Oppenheimer Holdings Incorporation. Over the past year, they're up 74.26%. They have a PE of 3.84 and a dividend yield of 1.18%. A smaller company, we can say, at $647.17 million. Now, let me just say, I currently do not own a position in either of these two stocks, but I am actually getting slightly convinced in this stock, OPY. And we'll talk about more about that in a second. They have a payout ratio of 4.25%, dividend growth rate of 3 years, and a 5-year growth rate of 4.18%. They pay these dividends on a quarterly basis. Now, this stock, what they do through their subsidiaries, operate as a middle market investment bank and full service broker dealer in the Americas, Europe, Middle East, and Asia. They have a bunch of different investment companies, and the company was founded in 1881. So this company is like 140 years old. I'm not saying just because a company is super old that they can't fail, but it shows that this company knows what they're doing, and the executive board and the executive team is very knowledgeable, and they know how to invest their money. They obviously know how to. They're super undervalued right now. We'll see right here on this stock that they have a market cap of $640 million. Very small. We talked about that earlier. That is how you get those dividend growth and the huge yield on cost. They have an earnings per share trailing 12 month of $13.20, and they only pay out 60 cents per share. Huge stuff, looking good for the stock. Quarterly earnings growth up 67% year over year. Quarterly revenue growth up 14.7% year over year. Nice stuff. Total cash are now $822 million. They have more cash than they do debt. They only have $737.76 million in debt. Return on assets 6.47% with a return on equity of 26%. Profit margin, operating margins both very solid at 12 and 24%. We always like to see that stuff. Now, payout ratio right here on Yahoo Finance is 3.84%. Looking at these incomes, 920, 958, 1 billion. 1.1 billion, 1.45 billion. Total revenue increasing incredible amounts. Now, 177 million, pretty much $178 million in net income. Look at this. Trailing 12 months, they made 1.45 billion in total revenue. What's this company's market cap? They have a market cap of 647 million, so they're bringing in more money than their company is worth. I really like this stock. I really like it. Okay, looking on some more stuff. Here's just a kind of third quarter 2021 earnings overview. They reported net income of $26.3 million for Q3 of 2021, or 2.07 basics EPS for the third quarter of 2021, an increase of 67.8%. Now, revenue for the third quarter of 2021 was $315 million. They literally made their revenue in one quarter 50% of their market cap, which is an insane stuff. An increase of 14.1% compared to $276 million for the third quarter of 2020. You can just look at these numbers and you will see everything is increasing. Tangible book value per share. Book value per share. Their book value per share right now sits at $61.43 per share. How much do they trade for right now? $50.75. So the company is undervalued. Okay, it's looking at some very solid stuff. It used to be $45 a share whenever they put out this presentation. It's already up $5 since then. Maybe people are catching on. Looking onto this, what we'll see is clients' asset under administration is $117 billion and asset under management is $43.6 billion with a B. Huge things are looking solid for this company. Outflows to inflows, way more inflows at $69.13 million compared to outflows of $51.96. Over this past quarter, relatively the same, but a little bit more selling pressure. Q2, Q1, you can see buying pressure has been happening ever since Q2 of 2020. And Q1 was a little bit offset, but still very, very similar. But everybody, that's what I have for you in this video. These are my 2 undervalued dividend stocks. Make sure to leave a comment down below if you enjoyed the video. Thank you for making it all the way to the end. So if you enjoyed it, make sure you give the video a thumbs up and you subscribe. You turn on those post notification videos coming out every other day, yada yada, you know all that good stuff. Thank you again, and I will see you at the next video.